Well, good morning, good afternoon, good evening, wherever you are in the world. This is Patience Rose, and you're here with us with Red Worldwide, and we're live today with our co-working session, and we are so excited that you've joined us. We have a very special guest with us today, and so we're going to get started in just a few seconds, and we are really happy that we've been having such traction on our co-working. We have some people that are watching from wherever they are and they're not coming directly through Zoom, but then we have people who are here with us in the Zoom room. So we want to make sure that you know that if you desire to be on and to comment or to ask questions and be live in the room, you can go to our website, www.redworldwide.org, and right there in the header, you'll see where it says co-working. And you can just click right on the link and it'll put you right in the room with us every day, 7 a.m. Pacific Standard Time. We get ready, and so right about 7:15, we're live. And then you can also make sure that there is the ability for you to come back later if you want to rewatch it, or if you have other comments and things that you want to make. We do make provision for you to leave comments later on. So with that said, we are so excited, and I want to give us the full opportunity to have a full session today. And so let me just bring up to the mic our special guest, Mr. Brent Paiste. And I want to say that Brent is such an awesome resource for us. He has provided many of our members access to tools that they can use to grow their families' wealth, and we are excited about that. But he also provides us educational materials, so that we can continue to provide people with what they need. When I was writing three of my books, I actually used Brent as a subject matter expert on some of the areas of finance and wealth, insurance, and just really deep diving into the information that he had so that I could make sure that I was providing everyone, when I was writing the books, the information that was correct and current and compliant with the current laws at the time. And so I really do appreciate that. He is a Red member who does give back. And so with that said, I'm going to turn the mic over to Britt, and thank you so much for sharing. Please tell us a little more about you and where you get all this education from, and what it is that you have to offer today.
Sure thing, Ms. Patience. Thank you. Thank you so much for inviting me here. Welcome everybody to this event for Q1. I'm super excited to be here with you guys. Patience had asked me, to come in and share a little bit more. We had a great opportunity to work together over the years. I've been in the insurance space for about 10 years, so about a decade now. And it's been an amazing experience. I think one of the things that Patience and I have really aligned with, not only in our faith and what our missions are, but really about understanding how money works. I mean, ultimately, there's a lot of different ways to look at the tool of money. One of the things I love about Patience, she always talks about the language of money. And as we started to work together, we started to realize most people don't understand the language of how money can work or how it can operate in different situations. One of the things of having Patience as a business advisor is that, there's different team members you have to build your dream team. And so one of the things that I'll say for me, being in the last 10 years, I didn't end up being in the insurance space because I chose to. One of the things that I always talk about, or, we speak along the journey, is like, I don't remember being in a sandbox and throwing out the sand and being like, let's be in finance, let's be in financial services. And so I kind of just so happened to something that fell on my lap, and it became a journey that I believe God had given to me. And part of that is really just being able to educate and empower families about how the tools of life insurance can work, especially when it comes to the aspect of legacy. So I'll tell you a little bit more about my story as we progress throughout here. Now, I know we've got about 40 minutes to share with you guys. I'll leave some room for some questions if you do have Q&A. And at the very end of my presentation, I will also have a QR code. If you guys want to get connected with me, I'll also have that. And I'm sure Patience will get connected with you as well. and primarily understand everybody that this is just an introduction. You're probably going to have more questions. You're probably going to be like, hey, he didn't dot the I or cross the T. I get it, right? But ultimately, we want to make sure we get you the information you guys need so that therefore, if you guys need a resource, you can have access to one. Okay. And I think patience, that's a big thing that my team and I had discussed yesterday, was talking about the power of access. So we appreciate you for having to always pour into our teams and really help educate our parts of the world. So let's go and get into it, guys. My presentation as an introduction for you guys is really about empowering change. We know that especially in the world that's going on today, there's so much uncertainty that's happening, and there's a lot of things that we can and cannot control. And what we want to focus on is what we can control, because a lot of the things that are happening we cannot control, but we can definitely be prepared on how to handle those changes. And we want to equip you with the right tools to help you make better decisions, or in a sense, help you be more informed to make better informed decisions. Okay. So first and foremost, let's go and look at it. We're talking about legacy with life insurance. My name is Brent Paiste. I've been in the industry about a decade, you guys. Really, it's one of my passions, but again, I didn't end up, growing up and saying, hey, let's be an insurance agent. I actually wanted to be an architect. One of the reasons why I loved Legos. I don't know if you guys were, back in the day, we used to deal with a lot of Legos. Now, for myself as a parent, I step on Legos all the time, and I don't regret not being an architect. I do believe that I'm being able to be the own architect in my life. But a lot of it has to now be with a completely different industry, and I get to help families with understanding how to build legacy with life insurance. And a little bit about my journey. I want to introduce you to my two children. And in the beginning, I have four now, but I wanted to show you how this journey kind of began here. And this is my oldest son, who's now 14 years old. So if you are parents out there and you're seeing this on YouTube, I'm just sharing this with you because everyone has their own walk. And for myself, this is my son Darren, and my middle child now, my middle boy now, Dylan here, and they were 1 and 3. And you see these little hearts here. And the reason why you're seeing these little hearts here, because the mother of my first two children, her name was Sonia Ann Otero, or Ann Sonia Otero, forgive me. And everyone knew her by Sonia. And this is me. I did have hair back then, but I share this with you guys because, again, life insurance, the industry of life insurance, wasn't something that I decided to go into. It was something that essentially found me. And I'm sharing this with you guys again, if you can kind of put the story together, is that, she ended up getting sick with choriocarcinoma, which was essentially an illness that was very, very fast growing. She was actually diagnosed at stage 3 when we found out that she had cancer. And you guys know cancer is not a fun thing to talk about. It is definitely a learning experience you'll go through. But the part is, she did beat the cancer 3 times. And so that was something that was, huge on my heart at the time. I was in the military, and I was also doing my nursing. So, I raised my hand to be the first Filipino nurse. Yeah, that's definitely one of the jokes, right? But, I did the whole route of, joining the military, doing the nursing program, providing for my family. And at the time, we were young. We didn't really feel like we needed life insurance because of the fact, I had some SGLI. I was the breadwinner of the working family, and she was at home, helping us, raise our kids. And this is kind of the dynamic that we had. And unfortunately, we didn't have any life insurance on her. And even though she had beaten the cancer 3 times, the side effects of the chemotherapy actually ended up still taking her. And so she passed away, and I was a single father of 2 children at the time. And, life was definitely very different for myself and, for my loved ones. And I share this with you not to like, again, make you feel bad for me or anything. I definitely believe that God has had a plan for me all along, just couldn't see it right away. And this is kind of where the journey of joining the life insurance industry had started. I ended up leaving my nursing career, even though it was a very respected career, and I decided to pursue the life insurance industry primarily because of the opportunity it presented to me of allowing me to have more time with my family, but also keep the story of what Sonia had alive about the importance of understanding life insurance. And just like any other industry, as time progresses, you begin to learn and unravel more of the benefits of how life insurance can actually help families. Now, we're going to highlight again, primarily for us business owners today, because today I'm also a business owner, and it's been an amazing thing about being in business. Many of you who've been in small business or big businesses, we know that every startup phase is not fun. And anytime there are challenges, we got to be well prepared. So let's go ahead and look at first and foremost understanding the financial pyramid, right? And we look at this to kind of give you a solid foundation of understanding how life insurance can be beneficial in any situation. But in most cases, there's different types of planning, right? If you look at the needs pyramid, we have progressive planning, aggressive planning, offensive planning, and defensive planning. Now, in any business or in any sport, if you guys had played any sports before, a great defensive plan could also be your best offensive plan. And one of the things I like about having a defensive plan here, this is the most important process or most important thing you should have is to protect what you earn, what you own, what you owe, and those you love. And this is the importance of life insurance. But we all know life insurance is not a sexy topic to talk about because most of the time we don't get to see how life insurance can benefit our lives while we're alive. And this is where the education comes in. It's really understanding how can we protect what we have? How is it that we can, not only protect what we have, but also protect the ones that we love and also have succession planning. Like beyond us, how can we actually further help those and really what do you call it? Bring to fulfillment the goals that you had started in the first place. So let's go and lean into it. So why does life insurance actually work? And again, this is like I mentioned, an introduction for you. I'm sure many of you, even those of you on YouTube, might have questions or might want to share things. And keep in mind, as an insurance advisor, I do offer term life, whole life, index universal life products, right? Different annuities as well. We also do Roth IRA programs. There are different options that we can offer, but for the purposes of this training here, I'm just going to share with you guys a few key pieces of why you want to look at having life insurance for you and your loved ones, especially if you're a business owner. And we'll talk about some key man and some buy sell agreements a little bit today. So first and foremost, let's look at first and understanding the law of decreasing responsibilities. What does this mean? Life insurance is meant to cover your income in earlier years because if you have young children like I did, we did have debt. We didn't have a mortgage at the time. We were living out in the Bay Area. We were renting, but again, there are challenges because coming from a single income household, right? Now I had to get childcare. I had to find ways to provide for my family and deal with the challenges of losing a loved one. Because again, moms out there, dads out there that are home by choice, right? You still have a very, very big job. And having to protect that individual in case they pass away, so that way you can provide childcare or maybe take time off of work or maybe get different treatment. The importance of life insurance has always been there. And then eventually, right, as time progresses in the later years, the idea for needing life insurance may not be there anymore because why? Maybe the kids are grown, your debt's been paid, mortgage has been paid off, but what I've seen today, not a lot of people are able to do that. Some people refi, a lot of different challenges, but just the idea, right? The concept of life insurance is to protect families' income during the working years. And this is why buying programs like term insurance could be a great option because you'll have your income covered up until retirement. And after you retire, maybe that need for life insurance is not there. But there are also situations where parents and individuals want to have life insurance, even after the mortgage has been paid off, even after all the debt has been covered. It's primarily to leave that legacy, right? So if you want to be able to do that, term insurance or even permanent plans are a great option. Now, another thing is the wealth building side of using life insurance. And one of the cool things that when people are earlier in years and want to save money, you have different choices and different options to do so. You can do that with, using CDs, investments, different strategies. I know for many of us who are business owners, our business is our quote unquote retirement strategy, right? Everything else in between is all being reinvested back into our business. But one of the great things about having the proper or the right kind of life insurance policy for your situation is that you can also build a strategy or build a plan that allows you to access or grow tax deferred cash accumulation inside of a plan that in later years, when you retire, you can actually utilize that equity and have it to be a form of retirement. So that way, when you do retire, you actually are able to have a guaranteed income for the rest of your life. And we do this with our annuity products within life insurance companies. And we also have different life insurance products that allow you to do this as well. And one of the biggest advantages is that in a life insurance policy, again, life insurance is not an investment. And I think that's a great thing to understand because, in the terms of talking about investment, it is not classified as an investment. Therefore, it has some tax advantages that traditional investment plans don't have. If you want to know what I'm talking about, we can definitely schedule some time to go over that. And I'm sure Patience definitely talks about this as she references the tax code quite often to share with you guys some of the big advantages that you can utilize with these tools. And last but not least, let's talk about in case you get sick. And this is another big challenge that whether you die too soon, live too long, or become ill, life insurance can be a big benefit for many families, especially business owners, because again, whether you are an individual, a business owner, or maybe you're a key person for a business, having to have a life insurance policy that covers you in all aspects could be a great tool to have in your tool belt. Now, let's talk about how life insurance has changed. And then we're going to get into, again, another key aspect that I believe is beneficial. We're going to get into first about the protection change of life insurance that's happened in the last 20 years. And then we're also going to talk about one of the great one of the great cash accumulation tools that you can look at. Now, traditionally, life insurance has been the same for over 100 and almost 150 years. And the best way for me to explain it to you is kind of like looking at car insurance, right? Many of you guys, especially for any of you in California, right, having to have car insurance is a requirement. And if you look at it, traditional car insurance, in the event your car gets into an accident, your family or your vehicle is actually compensated. Life insurance is very similar. You make these premium payments. In the event you pass away, your family is able to be compensated by that claim. Now, if you have cash value, that's another story, but traditionally that death benefit would only be available upon death. What changed was in 2007. And over the years, more and more companies have adopted this. For us as a non-captive broker, I have the opportunity to work with many different carriers. But one of the biggest advantages, not only has life insurance still kept the traditional death benefit, which is still a powerful tool, right? And we'll kind of talk about those things when I give some examples for businesses. And then I want you to think and expand on how much the death benefit is not only beneficial, but all these additional things that we have as well. So if we look at one of the things that have changed, our life insurance policies now come with additional features that allow you to access the money in the event you get an illness, maybe some form of disability, or if you came, terminally ill. And these are some of the biggest advantages that many life insurance companies are adopting today. And these are some of the focuses that we have. And this money can be utilized for medical bills, deductibles, co-payments, right? Replacement of income, maybe different treatment, and much, much more. And if you're a business owner, this is also huge. What if you're a self-employed business owner and something happens to you and you cannot go to work? I mean, we had a gentleman who actually bought a policy and he had purchased it with the purpose of protection. And he had $1 million policy. And within 4 months, he ended up going through a situation where he was unable to work for about 6 to 8 months. And for him being a self-employed business owner, you technically own a big job. And if you don't work, you don't bring in any income. There's not a lot of leverage there. And he was traditionally doing brick and mortar and doing what he needs to do and had a family at home, had a mortgage still to pay, but couldn't find replacement to work and bring in that income. Well, one of the biggest advantages, he had a life insurance policy with the chronic illness rider attached to it. And within 4 months of paying for this policy, he was able to accelerate this living benefit and receive around $60,000 and still have a quite large of a death benefit left behind. But imagine that being able to have access to around $60,000, right? Only had the policy for about 4 months and, had $1 million death benefit, was still having around, I believe, $750,000 left from that death benefit acceleration But that $60,000 he now was able to cover his mortgage, didn't have to stress out about, who's going to pay his bills, how he's going to keep his business running. This is why the importance of having to have the new kind of life insurance, the modern kind of life insurance is so important. Some of you might be like, well, Brent, that's all great, but that's if I wanted the protection, which is again, each person might be different in different stages of their life. But here's the cool thing. If you have traditional life insurance, you can have multiple plans. And at the same time, if it's suitable for your situation, you may consider, hey, you know what? What if I have a term policy that is a traditional death benefit? What if I want to reposition and maybe get something that is more beneficial and it's suitable for my situation? You might want to move to having a living benefits plan, right? Same thing if you have a permanent policy. Some of the great things about having a permanent policy is that it does have equity. Depending on the type of policy, it can be growing in different ways. But a big advantage of it is you can do 1035 exchanges. Again, if it's suitable for your situation, where you can actually roll over any of the equity in the account minus any charges from the previous company. And again, we can have conversations around that. But again, as long as it's suitable, you can actually do a 1035 exchange and roll over what you've been doing the last several years to get more of the modern and updated type of life insurance product. My recommendation for you, as this being an introduction, talk to your insurance agent, take a look at what you have because you want to be educated in how the tools work that you have in your tool belt. And this is very, very important. But this is one of the biggest changes that has happened in the life insurance industry that I definitely believe that everyone needs to learn about. Now, let's talk about index strategies, guys. This is the second component. Now, keep in mind, like I mentioned earlier, we do universal life programs that could be fixed universal life. We do whole life policies as well. But one of the key aspects that most of our businesses and business owners like to learn about today is understanding index universal life strategies. And basically, what this is, right? You have three different strategies here that you can look at. You have whole life products. You've got your variable products, and then you have your index products here. We're going to be looking at pretty much the three different lines, and the blue line is more like a whole life policy that you have on the account, which is again a guaranteed minimum guaranteed contract value that can give you that 3 or 4% every single year. Not a lot of flexibility. But this excuse me, the red line, forgive me, is the most understood strategy that most people utilize, and this is investing money in the S&P 500. Now, again, I'm not in a financial advisor or anything, but I definitely recommend to speak to one of your advisors if you have more questions on this. But what these strategies are implementing here or sharing with you is that when the market goes up, you earn. When the market loses, you lose, right? This is traditionally how people invest their money when they want to grow or outpace the inflation. And what our strategy is recommending something, again, depending if it's suitable for your situation or not, is that this green line is that when the market goes up, I can earn a potential or earn a portion of that, growth due to crediting, which is basically a form of interest. When the market goes up, you can earn, but when the market crashes, you can lock in your gains and your principal. And this is how indexing works. And for many businesses, right, they want the opportunity where they can minimize the risk of losing any money, but they definitely want more upside potential. And this could be a great option for them. And why is this super important? Brent, why would someone, even consider using life insurance as a tool for this? Well, when you think of different qualified plans, there's a lot of rules. And this is why I was talking about the classification of an investment, right? Is because an investment has certain rules. If you look at a qualified plan, again, which we have options and we can do, you can't have access to the money until about 59 and a half. Okay. If you do borrow money from the account, you do have to make those premium or payments back right away. And at the same time, there's not as many tax advantages because you eventually do have to pay taxes later. One of the great things with using life insurance policies, they are not subjective to that 59 and a half rule. And you're able to actually borrow or take collateral, or excuse me, let me use that term again. You can borrow against your policy and utilize that death benefit as collateral. And why is that? Why is that so important? Well, maybe you have certain business expenses that you want to take care of. And instead of taking it out of your cash flow, or maybe your working capital, you can actually take it from, a loan against your death benefit from the life insurance policy to pay for these expenses. And one of the advantages, because life insurance policies do traditionally have lower loan rates than what the banks provide, And it's a lot simpler process for you to do as well. Literally, there's a lot more flexibility that you can find with life insurance policies. And now keep in mind, even if you don't want to have life insurance policies, you can also have indexed annuities or IRA accounts or even Roths. Now, as I'm sharing this with you, you're like, okay, Brent, this sounds great. I love that. I love the fact there's life insurance that now has better protection features. Now there's also life insurance policies that I probably wasn't aware of that can grow some cash accumulation that can give myself access to help me grow my business or deal with other expenses. And on top of that, one of the other cool things is that you can, again, you partner with your CPAs, and that's one of the things that we do. We partner with CPAs. We talk to your HR. We figure out ways that we can help your business by offering possible benefit strategies to your employees to help create retention. I mean, one of the biggest challenges when I work with restaurants is they have a hard time retaining their cooks, retaining their employees because, traditionally there's not a lot of benefits that you would get through owning or having a restaurant. For your employees. Well, now you can offer them a solution that would give them the protection for their family, access to money in case something happens, and a potential cash accumulation growth within their life insurance policy that they can utilize to supplement some of the retirement if they need it. Okay. And we can definitely talk about that as we progress here. Again, we'll have some time for Q&A at the very end here. Okay. And last but not least, let's go and talk about two areas that might be super beneficial to many of you who are businesses is the key man insurance. Now, key man insurance, people ask, well, Brent, what's different? I want a specific key man insurance. Guys, policies are similar, meaning there's term policies, whole life, index, universal life policies, and right in different policies like variables. We can highlight that as well. If you do have questions more, we definitely have a plethora of resources for you to learn from. But essentially, what makes it different is who owns and who benefits and who's paying, right? So in a key man policy, it would primarily, if you were a key person, right? Let's say the CEO and manager, and the company was like, man, you know what? I have an insurable interest in this key person because if this person is no longer there due to death, right? I need to replace that person and I'm going to lose revenue. I'm going to, have challenges in transitioning of my business. Well, the business can actually pay the actual life insurance company to create the contract, right? Where the contract would be that in the event the key person passes away, the life insurance company will pay death benefits to the actual company. Now, why is this important, right? If you look to the right here, and again, I won't have to read this too much, but it primarily means that in the event something happens to the key person, the company can have funds to maybe pay any loans, could probably use that money to hire more people, right? Maybe that key person did the job of three people. Well, guess what? You can actually, let's say you're paying that person $300,000, you might be able to get $1 million policy and, essentially have a new CEO that you can pay them a contract for 3 to 5 years, right? There's so many different ways that you can use life insurance policies. Now, speak to your business advisor or speak to your CPA, but there are possible tax advantages, right, for the businesses to have this for a key person benefit for your business. Okay, so it helps you with legacy, help you with continuity, like Patience had just mentioned. So if you guys want to carry out that business, right, and you lose that person, the CEO, right, the owners of the company could hire more people and keep the business going because they now have the resources to do so. And like I said, make sure you talk to your advisor about it because you can have some potential tax benefits for your business as well. Okay. So let's go on top of the next one here. Maybe this is a one that most of you might need to know. Well, Brent, what if I have, what if I am the partner? What if I have multiple partners and you may be looking at maybe a buy-sell agreement? And what this is primarily let's pretend that this situation we had three owners of a company and each owner had an equal share of $1 million, right? The value of that business is $1 million. Now, why is this? Why would I need life insurance if I'm dead? Like, what's the point of it? Well, what the challenge could be, let's just say, I'm going to go ahead and do some of my stick figures here and we can look at it, right? So let's just say, we'll say John here. So John here has a family at home, right? So John has a family at home. I'm going to do an ugly stick figure here. And we're gonna give her some hair too, because I know it's 2024, but we're gonna give her some hair. So we have this family at home, and this family at home, in the event this person passes away, right, the next of kin would essentially inherit the business, unless there's some sort of buy-sell agreement. Now, another example this could be is kind of like having a prenup, right? So if something happens to your business and you decide to leave, well, guess what? You can essentially buy out these partners who are, again, but if this person passed away, this $500,000 would be paid out, right, to the leftover business owners, right? And that essentially paying it out, the family, forgive me, would receive the business, right? So instead of the business being received, the family would get received that $500,000 death benefit that was paid by person A, person B, right? And now the family would be bought out because that $1 million death benefit would be paid to the family heirs, and the business partners would now be able to again keep their share. So now their family is being able to receive the benefits instead of them having to run the business. Because who knows, what if the business partners are sharks and they end up, really not giving anything to the family because there was no agreement in place. So this is a great way to protect your family, because if something happens to that business owner, that person, and there's multiple partners, well, the multiple partners can have something in place to buy out the family in the event, or buy out the business in the event the person passes away. Okay. So those are some great ways to have continuity in your business. It's also a great way to plan, right? The best thing you can do is plan. I'm never a fan of saying, hey, go and get a prenup or anything like that. But I'm just sharing that in businesses, right? It's important to, when things are good, to have a conversation of what happens when people pass away, right? How are the families compensated? Because who knows what the business is going to be valued as, and who knows if your family members even want to help run the business, right? So there's so many different things that you can have, guys. We just talked about key man insurance. We talked about buy-sell agreement, all within the use of life insurance policies. Now, I'm going to give you some resources here. Feel free to take a snapshot. These are some different ways we can talk about legacy planning and just alternative strategies that you can utilize. Again, we'll talk a little bit more during our Q&A, but here's a quick snapshot for you. And last but not least, if you want to get connected with me, feel free to scan that QR code. You'll have access to my Calendly. We can schedule some time together and talk a little bit more. But I am going to leave some room for Q&A. I know Patience here had a question for me. I'm going to go and stop my share here. Now, thank you guys first and foremost for giving me the opportunity to share. Hello, YouTube. This is my first time going live with you guys. If you're able to watch and get to this point here, and I look forward to sharing more information with you guys. We do have our own page as well. We do have Instagram. We'll share with you maybe somewhere here. We'll get you some of that information so you guys have access to that. Now, I did see a question here. I think Patience had sent me something regarding a Q&A. Now, many of you guys who may consider, well, Brent, I want to offer benefits, or have benefits for my employees, or even for yourself. Let's just say you're self-employed. Okay, you're a 1099. You might even qualify for a SEP IRA. Okay, an IRA just stands for individual retirement account. Okay, now I deal with index accounts and fixed accounts. So when you look at having to have a qualified or non-qualified plan, now keep in mind, please speak to your advisor. A qualified plan is basically a plan started with qualified money that has been qualified to pay for taxes. So as an example, a qualified account could be like a 401k. What that means is you don't pay taxes now, you pay taxes later. So that is a qualified account. One of the advantages for a qualified account as an individual is that you don't have to pay taxes on that money. Your taxable income can go down, right? Now, keep in mind, speak to your advisor. This is important. But in the same essence as a business owner, you can have something like a SEP IRA. There are certain limitations. Now, I believe a SEP IRA or solo 401k, you can have one in utilizing indexed accounts. But let's just say, for example, this year in 2024, the limit is about $69,000 is the limit for a self-employed business owner. Keep in mind, I believe there's also some rules about 25% of contributions. But again, keep in mind $69,000 limit, so you can actually defer your taxes in a SEP IRA, and by the time you do retire, you will have to pay taxes, but you have to wait till 59 and a half. And that's one of the things that a qualified plan is. It has certain rules that you have to follow in order to take advantage of that benefit. A non-qualified plan, again, could be within IRAs. This is kind of having like a Roth IRA, a non-qualified plan, or excuse me, it's still a qualified plan, but using non-qualified money. Okay. So non-qualified money, meaning it's not qualified to pay taxes on it. But knowing that your Roth IRA account, right, has certain rules. Again, you can only contribute so much dollar amount on that. At the same time, you still can't touch that money until about 59 and a half. But these are additional benefits that businesses can have for their employees that the business can have advantages on, right? And then the employee would be able to receive those benefits to help create retention. So there's so many different options that you can have. I know many of you guys, and if you think about it, right, think of how big corporations, how they help their employees. So what's done in the big world can also be done in small businesses as well. You just have to know and work with the right advisors that can help you utilize these tools to best benefit your business. All right. So if you guys have any more questions here, Patience, I'm gonna turn the floor back to you guys. But if you guys have any questions, feel free to ask. I'd love to answer any questions that you guys might have. I hope that as an introduction, this is very beneficial for you. And again, we are, the life insurance industry is very regulated, but one of the things I love is that our industry, we have to know all the other industries because we have to know our
Hmm.
clients' assets, we have to know our clients' goals, we have to help figure out where money is and how it's optimized and whether we can optimize these different strategies. As long as it's suitable for their situation, we can make sure that we can reposition money and help them really take advantage of the tools that are out there.
Thank you so much, Brent. Oh my gosh, you are a wealth of knowledge, and we are so excited that you could share that with us today. This fits right into what we've been talking about. We've been talking about succession planning, we've been talking about legacy, and we've been helping business owners look at their own situations to see what they can do initially as they're getting started in business within the first 5 years to create options for themselves down the road. And so we've been talking about our freedom point. We did a whole deep dive yesterday on freedom and understanding that you created your business so that you could have freedom. And then now we're coming in today with this particular episode, which is amazing, to talk about how do you protect the business? How do you protect your family? How do you make sure that this thing that you're building, this company, has the ability to continue if something happens to you? How can it thrive without you, and how can it live beyond you? And so you brought those things to bear today, and I wanted to just ask a couple questions that I'm being asked.
Sure.
you know with regards to someone who does decide that they want to utilize the key man policy. What happens if they retire from their business? They've set this key man policy up. It was only there for them to use, while they were in this company, and they've now decided to leave the company. What could they do with that key man policy?
Yeah, so there's different options out there. Some businesses can actually change ownership. You can actually change ownership to the individual as well, and they can have that as their own insurance plan. And again, they can utilize that maybe to supplement for retirement or have a death benefit protection when they pass away for legacy, or they can have it for in case they get sick, something happens to them down the line, they're able to take that benefit with them. Now, it also depends if that policy was more of a term policy or a permanent plan. There's a lot of different options when the time comes. Here's the thing that people don't really they don't know. They think when they get something, that's all it is. There's no flexibility, there's no changes. Well, you can. It just depends the type of plan you have and kind of what the overall strategy is. And many businesses start key man policies and would eventually, right, have clients who change ownership to give it to their employee because they were such a good employee, right, to transfer ownership. So there's different options out there. Now, one of the biggest advantages why I didn't really highlight this because, traditionally life insurance is primarily more for the death benefit and protection, succession planning. That's its main purpose. But one of the best advantages of the life insurance that the tax deferred cash accumulation in the account can be accessed tax free. And that's one of the cool things that people don't realize that, these tools I will say it's a very similar asset class to real estate. And many people love real estate because of how you can utilize equity and grow, grow wealth. And one of the great things about life insurance is also a potential tool that you can utilize that has tax deferred cash accumulation, doesn't have doesn't lose due to market volatility. But you still have fees, cost of insurance if you're using life insurance. If it's annuities, completely different aspect of it. But the cool thing is that you can utilize these plans and potentially have tax-free income during retirement years or during times you need the money in general.
That is ultra amazing because sometimes people are, they think, like you said, that they're stuck. I've got this key man policy. Now I'm getting ready to sell my company or sell my interest in the company.
Yeah.
What can happen with it? And so the options that you provided today helps us to know, first of all, that we do have options. Secondly, it provides, a different view of things that could happen, for many of us when we are, trying to build, and trying to make movements. And some of us are serial entrepreneurs. We buy and sell. Okay.
Yeah.
So,
Yeah. Yeah.
so we want to know that we have options.
Yeah.
Okay. Another question that, I get asked as a owner, of a company and a business advisor, how would you or how could you protect yourself when you have many different partners, and is there something that you can do as a benefit, okay, for the partners, not necessarily employees, but I'm talking about the owners? Is there something that you guys have for us?
Yeah, so I mean, there's executive bonus plans that you can have for partners. I did mention a little bit about buy-sell agreements, so that's a great option as well to protect the business owners, right? But you can also have executive bonus plans or bonus arrangements. There's just ways where some business owners maybe they don't take a salary, they don't take much income. Maybe their salary is really low because they're reinvesting everything back into the business, and you're looking to say, well, what if I want to actually help, I want to build my own retirement too. Like I want to have something, but I don't know how to do it. Again, speak to your advisor, talk to your CPAs, but what I've seen has been done before is that some businesses will, as an owner, may take a higher income. So as an example, maybe, you're getting what they call a double bonus where the company is paying for your policy through a bonus arrangement where they're paying the premium amount plus the taxes on top of that. And you have to pay for you as the employee or the partner that's receiving that benefit, right? Would just get a higher W-2 or higher pay. And again, they will be able to have their own policy that's essentially bonused by the company. So there's different options that you can have as well. I know a lot of businesses like that because again, they really kind of live lean and mean, but they want to have something that allows them to be protected, not just for the business sake, but your family, right? Because you might have a policy for your business because it protects the business, but what's going to protect your family? So these are other options that you can have for as individual policies for the partners.
That is amazing. Thank you so much for that because we're looking for ways that we can, make this all matter for
Yeah.
us, because some of us are putting in time, man. We're doing all the things we need to do to make the business what it is, but it's at a sacrifice in some other areas. And so, when I'm working with my clients, I talk to them about making sure they have a compensation analysis done so they can figure out what it is that can be done for them, in their salary. But this makes an option, of some type of non-salary compensation available, through life insurance. And so
Yeah.
that's another option for us. Thank you again for that.
You're very
Well,
welcome. Let me mention one more thing here, patient, before I
oh,
before I
sure,
get
sure,
off
sure.
here.
Go
And
ahead.
I think another great thing as well, I've heard you speak about this. There's a lot of different ways to benefit. We also have not just businesses, if we also do ILETs, if you're somebody that owns business trust or owns trust, there's also ways to have life insurance policies structured for those components as well. So remember, it's primarily who the owner is, the insurer, and the payer is, right? These are certain things that you can use and have the right team around you. I think patients, and I'm gonna highlight this because it's been such on our heart here, is having access. You may not be the expert expert in your field, but having access to the right information will help you expand what you can do for you and your community. Okay. So Patience, thank you so much for the time here. We appreciate you. And again, if I'd love to come back here whenever you guys have questions or you need some help here. All right.
Thank you so much. And thank you all for being on with us today at Co-working Live with Red Worldwide. We'll be right back here again tomorrow, same time, same place. So please come because tomorrow we talk about our creativity and what we can do to make sure that we're always iterating, always innovating in our businesses and to make it such that we are able to get that monopoly control that we want to get in our
Mm,
industry.
love
Well,
it. Love
yeah,
it. Give
we're
me.
excited about it. And so we look forward to seeing you again right here on Co-working Live.